Hey traders, welcome back to the weekly Forex Forecast. Yesterday we had non-farm payrolls data come out and the market did not like this number because not only did it miss to the downside this month, but we also saw last month's revised down to 89,000. And the market is now also assuming that this month is overstated as well, and we saw a risk off coming into the markets across the board yesterday because of this. Now keep an eye out tomorrow for a brand new weekly stocks forecast. I am going to be introducing a stocks video tomorrow. Many of you have been asking me for a while for a stocks video, and I have now put together the format very similar to the weekly Forex forecast video, but for stocks instead. So keep an eye out for that. That will be dropping tomorrow. In terms of the dollar going into next week, something very important to note is that we do still have weakness in the dollar. And you can see the upper bound at the 101.96 sits right at 30-period moving average. So going into next week, we are going to look at a couple of dollar pairs, but just pay attention to this also in the DXY. If I turn on the quarterly levels, which is this level here and this gold level here in the hedge dash algorithm, you can see on a quarterly basis, we are making our way down towards the second lower bound. So what that means is we have roughly a 95% chance of pausing or reversing at the 100.33 in the dollar index on a quarterly basis. And of course, we've still got the months of September in Q3 before we move on to Q4. So if we do get further downside in the DXY next week, and DXY weakness is something I'm going to be looking for next week, but if we get further downside, just bear in mind that the weekly lower bound also sits right at the quarterly second lower bound. And so the 100.33 to the 100.39 area is likely to be a very significant support area for the dollar index during the month of September. So downside really does seem to be limited, even if we're going to be looking at a couple of dollar pairs next week to the downside. So just keep that in mind. I'm also going to show you in today's video the setups that I think are much better played next week and offer the best potential, and also allow us to trade around US CPI, which is coming out next week, and also an ECB decision on Thursday. Okay, so moving on to the portfolio selection for next week, and you can see the two standout currencies to the upside are the Japanese yen and the Swiss franc. And both of these are risk-off currencies. So when we get that non-farm payrolls data out yesterday and the market takes it badly and we start to see stocks selling off, then we start to see risk-off flows coming into the Forex market, primarily the yen, the franc, and at some point the US dollar. Now the US dollar works on what's called a US dollar smile, and essentially when you have very, very hot data, like when we had really hot CPI, the US dollar goes higher. When you have very, very cold or very bad data, the US dollar also goes higher. And if you're somewhere in the middle, then the dollar tends to go down. And we had that kind of COVID inflation post-COVID. The dollar rallied. We saw the big rally and then the peak in September. And ever since CPI peaked and started to come down, the dollar has been coming down with it, and it's moved back inside the middle of the dollar smile. And now what we're seeing is we're seeing poor data come out. It's not yet bad enough to cause a massive reversal in the dollar, but it's getting close to that point. So we're at a point where the dollar is kind of moving sideways or moving down. But once we start to get those poor data prints coming out and they're bad enough to indicate a recession is, pretty much imminent, or the US is going into one, then we're going to start to see the dollar respond and catch up with the yen and the Swiss franc as a safe haven asset, as a flight safety. So we do have to be careful about, shorting the dollar, but specifically heading into next week, I do still favor dollar shorts, and I do think we're probably going to test that quarterly second lower bound highlighted just a minute ago. So US dollar shorts are something we're going to look at, but they're not my favorite play because of what we've just discussed in terms of, risk-off flows coming into the markets, and it can actually cause the dollar to rally. And at the same time, we have US CPI on Wednesday, and we also have the ECB decision on Thursday. So because of that, to the downside, we will look at a couple of dollar pairs. We're going to look at euro dollar as well, because we always do. And we'll also look at US dollar yen. But apart from that, to the short side, I primarily want to be looking at the Aussie. We're going to be looking at the Canadian dollar, because although it's moving higher, it did actually have an interest rate decision last week. The BOC cut interest rates. And of course, we are also seeing really strong weakness. And of course, we're also seeing a lot of weakness in crude oil, which is negative for the Canadian dollar. So the Canadian dollar is the number 2 short going into this week, and we're also going to be looking at New Zealand shorts. And to the long side, primarily, we're going to be looking at the yen, we're going to be looking at the Swiss franc, and we're also going to be looking at the pound. So primarily, we're going to be looking at Aussie yen, Aussie franc, pound Aussie in today's video. We're going to also look in today's video at CAD yen to the downside, CAD franc to the downside, pound CAD to the upside. We're also going to be looking at New Zealand yen to the downside, New Zealand franc to the downside, pound New Zealand to the upside. And we'll also look at US dollar yen to the downside, because even if we get risk off, the US dollar should go down against the yen. And we'll also, of course, look at euro dollar, which we look at every single week. Okay, so kicking off the markets with crude oil. We look at this every week, but it is actually a good short. Very weak market. I do expect this to pull back. As always, you can look for this to pull back and kind of nestle into or trade above the 30-period moving average here on the 4-hour chart. And that just kind of bifurcates the week, as I talked about in last week's video. And this is where you can look for that kind of bear flag sell-off into the 64.71. However, what I would like to see is I'd like to see this bounce back, trade above its moving average. And when you start to trade above the moving average, you're getting that deeper correction. And I would like to see this really trading back above the 71.60. Now, interestingly, this sits right at the prior lows. You get a low, lower high, and then we get a lower low. And so we're trending to the downside. But as we pull back, we can stair step this prior low over here. So we trade into it. We also become overbought intra-week, so during the week, because above the 71.60, crude oil becomes overbought. This is going to be a great place next week that I'm going to be looking for a 1 or 2 day reversal to the downside in crude oil. And if we break through here for whatever reason, you'd probably have to have some kind of bullish catalyst. But if we did, the second place I'd be looking for a short to the upside is the 75.04. Even if I'm short here and I'm just looking to cost average it, to scratch this for a break even, above the 75.04, we become extremely overbought intra-week. And that is the second place I would therefore be looking for a short in crude oil for 1 or 2 day reversal, whether I'm short already or not. And don't forget, if you want to learn more about these levels and exactly what they mean and how we're using it, you can click on the strategy video. I've put it up here for you. But these are the exact setups we're running every single day throughout the week with GMT members in real time. Kicking off the Forex markets then with the yen pairs, and Aussie yen is my favorite yen pair to the downside. We're going to look at the dollar pairs at the end of the Forex markets. But Aussie yen to the downside is definitely something I'm interested in. You can see we have this really nice setup here. I like it when you get this kind of pullback. And the pullback kind of intersects into the moving average, and you could trade above the upper bound at the 96.76. So if we start to push into this area, this is where I'm going to be looking for a 1 or 2 day reversal to the downside in this market. If for whatever reason we break through here, and I like the fact we've got a prior low over here in the 4 hours and highs over here. So I can see a scenario where we break through, we start to test these highs, we trade into this low, and then this starts to roll over to the downside. And I'm personally looking to capture, 1 to 2 days out of 5, but I wouldn't be surprised to see this coming down to the lower bound, even taking out the prior low over the next few weeks. So I'm sure Aussie yen, now we've started to break out. You can see this kind of A, B, C, and this looks like a kind of one wave. So we've started to break out of this, you could say, this kind of correction here. And now that's happened, we should be making our way back down to low over the next few weeks. So Aussie yen as a short, probably on the cards for the next couple of weeks. If we break through here for whatever reason, again, some unexpected catalyst, whether I'm short or not, the 98.60 is the second place. If we breach this, I'd be looking for a 1 or 2 day reversal next week in this market. Why? Because we become extremely overbought intra-week if we trade above this level. Next is CAD yen. I can either be a seller or do nothing next week. I can't buy this market. So in each of these assets, of course, I have a single directional bias, and it is to the downside in CAD yen. Now, again, you've got this very similar setup where we've got this consolidation. It looks like it's A, B, C, and potentially a one wave. So if we trade back into the upper bound, especially if we start trading to the moving average as it intersects it, this is a nice kind of pullback setup that I am going to be looking at. We start to trade into lows over here as well. This is going to be the area above the 106.67. So we're looking at a weak market. We've got the Canadian dollar cuts from last week. We've got crude oil suppressing the price or weighing on the Canadian dollar. The yen is a fantastic long idea heading into next week. And then we become overbought intra-week in CAD yen. That's where I'm going to be looking to pull the trigger to the downside. So for a 1 or 2 day reversal, but again, wouldn't be surprised to see it coming down, taking out its low, especially if this correction is now breaking out over the next couple of weeks. And also, just as with all these markets, as a kind of backup level, if we break through here, say I short it, even if I'm not short, but say I do short it, and it blasts all the way up into the 108.44, This is the second place. We've become extremely overbought intra-week, so it's the second place I'd be looking for a 1 or 2 day reversal in this market. Next is New Zealand yen. Now I really like this setup because again, you've got this kind of corrective breakout and we break down, and although we had some, pretty strong momentum right at the end of the week, I would be looking for this to pull back, and I'm going to be looking for this to pull back to test the upper bound. Now, sometimes when we go through this every single week, you can get fast markets. Say we start to pull back, you fail to take out the upper bound and you just break through like this. You can look for that bear flag setup, of course, with all of these into the 86.14. But what I'd really like to see is I'd like to see this pullback, take out the prior highs, become overbought intra-week above the 89.61, and then we're in the sell zone essentially. So we break above that. At the same time, we'd probably be pushing into this moving average, and that would be the opportunity to look for a sell for 1 or 2 days to the downside. That's what I'm going to be looking for personally. If we blast through here for whatever reason and we breach the 91.34, although I don't expect that to happen, but if we do, if the unexpected happens, this would be the second place. Whether I'm short or not, I'm looking to risk manage that first position or just looking for an initial entry. That would be the second place I'd look for a 1 or 2 day reversal to the downside in New Zealand yen. But I cannot buy New Zealand yen next week. Moving on to the Swiss franc pairs. The Swiss franc is the second best long theme in the currency markets next week. And of course, Aussie franc to the downside is the number one franc pair that I'm going to be looking at trading. You can see we've started again to make our way down after this big correction, very similar to Aussie yen. We failed to make a high over here. We've actually started to break down below here. And what I like about this again is that if we pull back, we're stair-stepping into these prior lows over here. We're moving into the 30-period moving average. And at the same time, if we breach 0.5706, we become overbought intra-week. If we become overbought intra-week, that's going into the sell zone throughout the week, where I'd be looking for that 1 or 2 day reversal to the downside. Again, I would not be surprised to see the Swiss franc now making its way, or in this case, Aussie franc making its way down to the prior low over the next few weeks. So franc pairs and yen pairs are probably going to be good shorts over the next few weeks. The second thing you can look for as well is if we break through here for whatever reason, unexpected as it is, if we take out the 0.57899 and by definition become extremely overbought intra-week, this would be the second place, whether I'm short or not, that I would look for a sell order on Aussie franc next week. And finally, as always with these, you can look for this pullback. It might just settle. You may get the market just kind of move sideways, and it might actually just move into its moving average, and then you can look for that bear flag setup in that case into the 0.5540. Next is CAD franc. Now, just by going through the portfolio selection, see how this just picks out these really nice kind of trending markets with these setups. But you can see we're making our way down. We've got momentum to the downside. And so any pullback in this area, especially if we breach the 0.6277, this is going to be the area where it looks to me like this. Probably you could draw this a little bit better than me, but if we do breach that, we could even trade into that upper trend line there for those of you who like your trend lines. But if we breach the 0.6277, we become overbought intra-week. That's the opportunity I'm going to be looking for a 1 or 2 day reversal to the downside. If for whatever reason we blast through here and we start to break out to the upside and all of this turns into a much bigger A, B, and then we come up, take out this area. If we breach the 0.6344, this is the area where I would start to look for a 1 or 2 day reversal as well, whether I'm already short or not. And as always, you can always look for that intra-week breakout. If you fail to trade above the 0.6277, trade into the moving average, and you can look for that sell-off into the 0.6144. Next is New Zealand franc. Now we have, just like in the other markets, this kind of correction, and we're starting to break down. And you can see we've already started to break down with this kind of head and shoulders patterns. We've got a high, got a failure to make a high, and look at how nice it just kind of trends, consolidates into its 30-period moving average, and then it starts to sell off. So you may see this just pull back, again, kind of settle into its moving average and then sell off down into the 0.51273. Again, just like it pulls back towards moving average, rallies away. Pulls back, tests the moving average, rallies away. Into the moving average, rallies away. Consolidates on the moving average, rallies away. If we start to break higher though, for whatever reason, if we start to break higher, the real setup I would like to see next week, if we can break through the 0.5283, we become overbought and all of this becomes part of a right shoulder. And if we trade through here, I'm going to be looking for a 1 or 2 day reversal to the downside New Zealand franc. If, as unexpected as it is, for whatever reason, I might already be short here, might push into here, I might short it, and then it blasts into the 0.5361, probably takes out the prior high, that would be the second place next week. I'd be looking for a 1 or 2 day reversal. In this case, I probably would already be short, and this would be a risk managed just to try and get out of both of these for break even. Very common technique I use throughout the week in the GMT members area, but unlikely it's going to take out that second upper bound unless we get some real unexpected catalyst. Moving on to the pound pairs then, starting with pound Aussie. And what I like about pound Aussie, you can see we've been consolidating and now we're getting this breakout. And look at how nicely this is just breaking above. We're getting this momentum coming in. So what I'd like to see is I'd really like to see this pull back. The moving average is already kind of intersecting it. If it pulls back early in the week and breaches the 1.9489, this is where we turn oversold intra-week, and this is where I'd be looking to buy the dip for a 1 or 2 day reversal. If instead of pulling back, we see the moving average come up and we just see this kind of consolidate and flag, you can look for that kind of pullback into it and the rally into that kind of bull flag setup into the 1.9880. And as always, if for whatever reason, and I probably would already be long, if it tests this level and I buy it and for whatever reason it sells off all the way down to the 1.9293, this would be the second place next week. We would turn extremely oversold in a market which is something I can either be long or do nothing. And that'd be the second place I'd be looking for a potential long opportunity in pound Aussie next week. Next is pound CAD. I can either be a buyer or do nothing. I cannot sell this market. And you can see we've been consolidating and now we're starting to break out of here. So there is a good chance that, we just continue to push higher. We consolidate into the moving average there, and then you get that bull flag breakout into the 1.7956. If we start to see it failing below the moving average though early in the week, I'll be looking for this to pull back, test the 1.7688. This is where we would become oversold intra-week, and this is where I'd be looking to buy the dip for a 1 or 2 day reversal to the upside. Very rarely do you take out the lower bound and the upper bound in 1 week. If you break out intra-week, you tend to take out the upper bound. If you pull back and test the lower bound, you tend to reverse for 1 or 2 days. But the second place to the downside, where we become extremely oversold intra-week, and again, don't expect this to be the case, to trade into this next week. But if it does, for whatever reason, whether I'm long or not, the 1.7555 is the second place I'd be looking for a 1 or 2 day reversal to the upside in pound CAD. Most of the time, you're either going to get that intra-week breakout or you're going to get the overbought or oversold opportunity to enter these markets. And finally, we have pound New Zealand. Now, I much prefer the yen and the franc pairs, to be honest. The pound pairs are on my watch list, but I do really like the franc and the yen pairs the most next week. In terms of pound New Zealand, we're kind of what looks to be finishing this bigger correction, and we're starting to get this inverse head and shoulders. We've already consolidated into the moving average, so you could very easily see this market just trading straight up into the 2.14829 over the next 5 days from when we start the week. If for whatever reason, reactively, we start to break below the moving average and we trade into the 2.1047, this is where I'd be looking for this market to kind of hold and then reverse for 1 or 2 days to the upside. And even though it's not expected, and this would represent, pretty much a significant reversal in this market, because if we broke through here, whether I was long or not, if we broke through here and we took out this lower bound, we've actually made a lower low. So really, we've got a trend continuation here where we're not expecting that. So that would be a significant reversal. I don't expect it, but as a backup plan, if we do that, this would be the second place I'd be looking for a long opportunity in pound New Zealand, probably in this case cost averaging an initial losing position. Wrapping up the Forex pairs then with a couple of the dollar pairs, starting with euro dollar. We look at euro dollar every week. I do still favor upside because the hedge dash algorithm is telling me we should still be looking for shorts in the dollar. Yes, we're getting risk off into markets, but this at the moment is most likely to benefit the yen and the franc because the dollar, we're seeing weak data, but it's not yet weak enough to really spur that flight to safety. And I do think we're probably going to test that second lower quarterly bound in the dollar index. And that would be one more move to the upside, in euro dollar. So going into next week, you can see we're already consolidating above the kind of moving average. You could look for that intra-week breakout. We just consolidate and then rally into the 1.11749. And in this case, I would expect us to take out the prior high and probably take out the prior low in the dollar index as well. The second thing that I'm going to be looking for is if this pulls back, and this would be my preference, especially if we pull back and we stair step into the kind of prior high over here. You can see we kind of broke out, chopped around it, and then we broke through. If we pull back and we stair step this high at the 1.09973, we become oversold intra-week. So we essentially slip into the buy zone intra-week. And this is where, between these two levels, this is where I would start to look for a 1 or 2 day reversal next week in euro dollar. If for whatever reason, as a backup plan, let's say I buy it here and it trades all the way down to the 1.0908, it's the second place I'd be looking for a long position. Whether I'm long or this is an initial position, this would be the second place I'd look for a 1 or 2 day reversal next week in euro dollar. But I cannot be a seller of euro dollar next week. And the final dollar pair before we move on to gold and silver is US dollar yen, trending nicely below its lower bound. If we can get this snapping back early in the week right into the moving average and above the 144.83, this is where we turn, we get this kind of bear flag set up, we turn overbought intra-week in a market which is making lower lows, lower highs, and this is where we can start to, again, look for that reversal. And this entering into the sell zone above the 144.83, this is where I'd be looking for a 1 or 2 day reversal. Again, would not be surprised, I don't know if we've already taken out the low, but would not be surprised to see it take out these lows next week. And if we fail to pull back again, if we get a fast market, and let's just say we start to consolidate and the moving average catches up with it, and it was right here, you can look for that intra-week breakout into the 139.73. The final thing, as always, if we blast through the 144.83, for whatever reason, unexpected as it is, take out this high, the 147.37 is where we become extremely overbought intra-week. And this would be the second place, therefore, I'd be looking for a 1 or 2 day reversal, whether I'm already short or not. Okay, so wrapping up the video with gold and silver, and next week brings with it some specific challenges, which is that we're seeing risk off coming into stocks because of the data we saw, non-farm payrolls, US economy slowing down. In the midweek video that I did this week and put on YouTube, I went through how the ISM manufacturing report was talking about a slowdown internationally. The JP Morgan global manufacturing PMIs have started to contract. And all of this points to a global slowdown as well as a US slowdown. You can look at that midweek video. I've put the link up here. You can open it in a new window. So going into next week, the issue is if we're going to see risk off coming in, this could be bearish for silver. But at the same time, gold tends to hold up a little bit better, especially if we're not going to see a rally in the dollar. So what I'd like to do next week is reactively trade gold or silver either way. And so what that means is if we get a sell-off in gold and we test the lower bound, at the same time, what you'll probably see is you will see silver test its lower bound as well. So there will be no opportunity to short silver at that point, but we could step in below the 2444.39. This would be where we become oversold intra-week, and this is where we'd be looking for a 1 or 2 day reversal to the upside. Because I do overall have a slightly bearish bias on the dollar, you can also look at that intra-week breakout, so it starts to trend lower, and then you break back above the moving average throughout the week, and it kind of pulls back and nestles into the moving average. You can look for that bull flag set up into the 2550.50. And as always, if we, for whatever reason, would be very unexpected, but if we breached the 239133 as a backup, this would be the second place. Whether I'm long or not, I'd be looking for a 1 or 2 day reversal in gold. Now, if gold just rallies into its upper bound, what you're likely to see is silver at the same time test its upper bound, and that is where we can step in and look for a short position in silver if gold just rallies. In fact, if you're very nimble, you might be able to catch the intra-week breakout into the upper bound and then also flip and start to look for shorts in silver. So wrapping up the video with silver, and just as we talked about, you can see we're seeing some more weakness in silver. It's suffering more than gold from the risk off coming in stock markets, and that's because gold has some safe haven qualities to it. So if you're looking for longs and you're looking for precious metals to the upside because of the dollar weakness, I would favor gold. However, if we start to break out intra-week and we trade into the upper bound in gold, we would likely see silver pulling back, breaching its upper bound at the 29.06, taking out these prior highs. Here is a prior head and shoulders reversal. You can see this already, can't you? So we've already started to reverse. We've got this and we've started to reverse. Any breach of the 2906, this would be an area I would be looking for a 1 or 2 day reversal to the downside. We might just pull back, and nestle into, and again, this would coincide with gold testing its lower bound, but we nestle into the moving average and we get this sell-off into the 2681. So intra-week breakout, kind of bear flag setup. And again, if that happens, maybe you can get involved intra-week, but if you can't, if you don't manage to get involved intra-week and it takes out its lower bound, you can just switch and look for the buy the dip in gold instead. So I wouldn't buy this, I would look for the buy the dip in gold. And the third thing you can look for, as always, which is more of just a backup plan, if we breach the 29.06, I will probably already be short once. We take out this high, we turn extremely overbought intra-week at the 30.18. This would be the second place I'd be looking for a 1 or 2 day reversal in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.